The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to Friday's show. I want everybody to take the day off tomorrow. Folks, let me start out with the April gold contract. As you can see, we did break out of that triangle that we had yesterday at that 1248 level. The target that it measured to was at 1282. We got to 1276, and then we sold off $26 very, very quickly. Of course, we've gotten most of that back in just a little bit of time, but that's a very important number up that way. And if we don't close really good today, this could be really interesting because of the fact that we do have this big cycle of this new moon and solar eclipse that comes in on Tuesday, and we're not quite into the window yet because this is only the 4th of March, but it's very, very close. If we take a look at what's happening to the silver market, you're going to see a market that is really struggling. We did make a 786 retracement last night when gold hit or this morning when gold hit that 1276 level. We hit 1558 in the silver, and then it sold off, dramatically also. So it's lagging, extremely badly. I mean, it's just, so this is not what I think is a major breakout in the gold. I could be wrong, and I'm wrong often, but I have to give you my opinions because I'm so highly paid to give you my opinions. And so I just wanted to let you know that I don't think this is a valid breakout in the gold. I know we made a new high. We're above that fib point from 2014 by about $6, but I still want to wait and see what happens at the beginning of the week because it still looks like we've got a chance to go a lot lower. If we take a look at the platinum, you're going to see the same type of move here. So we're not getting any of the confirmations you'd like to see that this is really a big bull market in this. As copper, that has had a big move. We had a top supposedly come in around 221 in the copper. We've been up to 224, but then again, I believe this is being pulled up by this cycle that's out here, and I don't think copper's going to run away to the downside or to the upside from here, but that remains to be seen. And maybe these markets go up forever. I don't know. There's always that possibility. We are certainly aware that can happen. Now, at the break, we're going to have a special guest on, Kyle Cooper from Centurion Energy out of Houston, Texas, will be on to talk to us about the energy complex, and particularly we're going to be asking him about the natural gas. So that's another one that I think we'll enjoy very much. Also on the guest front, we're going to have Barry Rosen on. He's a very, very good financial astrologer out of Fairfield, Iowa. I've known him for a long time, and he's in the top 10 of the market timers. And we're also going to have Tim Boast, who's a financial astrologer out of Sarasota, Florida, who's also in the top 10. And then we're also going to have the Queen of Fibonacci, Carolyn Broden, on. Carolyn used to work with us down on the floor of the exchange back in '82 when she was just a young kid. I think she was just about 21 at the time. Let's see. Yeah, that's about right. So it's going to be interesting to have those folks on in the coming weeks. So we'll be able to visit some of those folks. I still have Janet Yellen as a video out for her, an invitation out for her, but I'm still trying to raise the $50,000 for the half hour that she wants to talk about. So we'll wait and see. Now, I did want to something very, very important has happened last night in the overall market from Asia. I think it's worth noting because we've been waiting for this to occur, and that is that we did complete this ABCD pattern in the Hang Seng Index. As you can see, the butterfly pattern that we formed back on February the 11th. Then we had the big run up into the 22nd. We backed off a little bit, and then we completed the perfect ABC in price and time right up at the 1.27 expansion. So if this is right and Hang Seng's closed now, they're not going to open higher on Monday, but we'll see. It's going to be interesting, that's for sure. This is a really powerful cycle, folks, with this lunar cycle that's in here. So it should give us a lot of activity, no matter what happens. The euro has had a pretty good move from the bottom that we looked at the other day at that 108.53 level, and it's had a nice rally up in here. So if you're in that, like we mentioned, you made 50 points right away, 50 pips right away. And a pip means in the foreign exchange, folks, means percentage in price, and they take them out to the fourth decimal point, but you're usually trading about $100,000 contract, and so that figures out to about $12.50 per pip in the euro. So we'll keep an eye on this, but it's certainly has got a chance to move a little bit more, at least up to the 111.50, if it can do that. We had a pretty good reaction in the bond market following the jobs report, and we had a pretty nice run in the let me get this straight here. I'm trying to read things in the den and do this at the same time. I lost my train of thought now. Boy, oh boy. Better slow down and take it easy. I don't know what taking it easy is. I don't know to do anything any differently. Okay, let's get talking about something that, I was talking about bonds. Thank you very much. I think the bonds, I still think we're going to see higher interest rates in here. That's basically it. The two things that I'm watching the closest right now, of course, are stocks. I really want to be short those stocks. We did get up to a very nice area in the S&P this morning, up around that 1202 level, but there's no way that I can show you that chart right now, but I will get it a little bit later, and then I'll be able to see it without too much trouble. Okay, now the next thing I wanted to mention is about the natural gas, and we're going to have Kyle Cooper on at the break, but natural gas is close, folks. I'm going to do some long-term stuff on this over the weekend, and but it's got a chance. This thing is trading at about, I think, at about 5% of the value of its high that it made way back several years ago or something. I mean, it's just I looked at that UNG natural gas fund, and that thing is down to the point where actually, I think I got the chart here on it. I'm pretty sure I do. Yeah, where is it? There it is. Give me a second. I want to show you this because we got this big pattern forming, and this is natural gas futures on the weekly. Let's put this one up so we can look at it because we've completed a lot of patterns, and we've got this butterfly forming down here. Now, let's try that again. It's a 3 drive to a bottom pattern on the long-term dailies. This is a weekly that we're looking at right now in natural gas. And, folks, this thing really swings a lot. If you look at that chart back on February of 2014, I happened to be in it that day. It was an expiration day, and I didn't know it. And I was short, and I couldn't believe it. It moved like $7,000 in one day on one lot. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I believe we have Kyle Cooper on the line. Kyle, are you there? I was hoping I would get him. I thought that he was. I've had a little bit of a miscommunication problem, so we'll have him on in just a second, I guess, but we'll wait a little bit. The first chart that I posted in here was the chart of crude oil going over the past few weeks, and it looks like we got a pretty good top coming in here in crude around the 35.70 level basis April crude. As you know, we've had a 40% rally in this thing over the past, let's put this chart back up so you can see it again, because there's a lot of patterns coming together in that area, at 35.70, and that's a 40% move off the bottom, folks, because we bottomed at $25 a barrel and change, and we rallied up to $35 a barrel. So that's a 40% move over a 2-month period. So that's a pretty good rally. But you know, this thing has been so very, very bearish because we've come down from well over $100 a barrel down to 25. Whether this is going to be the major reaction to see us go into new low ground or not, I don't know. All I know is here in Tucson, Arizona, you can buy gas at $1.18 a gallon. So, boy, that is flat out dirt cheap. You know, it's it's really, really cheap. And when you drive a 1968 F-100 truck, you know, that's not a lot of gas to use. So that's a pretty good thing. Regarding this natural gas contract that we're looking at, I don't think you just can't buy it here and close your eyes. But I'm watching this UNG, which is the Natural Gas Fund. And folks, this thing has gone from 522 way back about 10 years ago down to $5. It's dropped 99%. Can you believe that? How'd you like to have that one in your retirement account with a scale down buying program? Shut the front door and raise the rent. That would really be a bad one. But anyway, it's making a major bottom here, as near as I can tell, but it's still not quite ready yet. But it's getting very, very close. We want to watch it. We've had several questions about the grain markets. We've had a pretty good move in beans overnight. They've rallied about 10 cents. Corn has rallied a few cents. Wheat has rallied 6 or 7 cents off of some of those smaller areas. All I'm waiting to do is to get through this solar eclipse and new moon on Tuesday, and then I'll be looking to be a buyer. Now, if the market takes off at that point and I don't get in, then I'll wait to be a buyer on the first retracement, is what I'll be looking for. And believe me, when markets are down this far, the bulls are absolutely scared to death. So the first time it starts to even fade a little bit, selling comes in, and that's what forms these Gartley patterns and double bottom patterns where, the shorts are, pressing the market down one more time, and the bulls are scared to death. And that's what turns the markets. So we'll see what happens after this solar eclipse and new moon that we're going on to look at. As we had Norm Winsky on yesterday of Astro Trend, he mentioned that the solar eclipse for the stock market are really not very much, but we're followed 2 weeks later by the lunar eclipse, and those really are very, very important. Those are the full moon ones, so that's important. We also have Jupiter is hanging out there in the sky too. It's it's really at a really critical level, and of course Jupiter is the planet of expansion, so that could be another one that would be very, very interesting, to keep an eye on. The question someone's asked me about the U.S. dollar index, all we're seeing now, folks, is we're just seeing a retracement in the euro. When we got down to that 108.53 level, we're trading at 110 now. But the main thing is the there were two major numbers there: the 61% retracement and the 78.6% retracement off previous lows. And that's just a numerical way of looking at cycles. When you look at a cycle, everybody looks at it in time, and what we try to do with pattern recognition is we look at it in price. Because if you look at your equity run, there's no place on the equity run for time, unless you're in options, and of course that's time decay. But you basically have to figure out what your positions are, based on the price, and that's why we look at it that way. We're trying to see, what these prices come down to, because those are the normal support and resistance that you get in the market. And remember, the way you define trend is if you have higher bottoms and lower tops, you're at higher tops, you're in a uptrend. Let's try it again. If you have higher bottoms and higher tops, you're in an uptrend. If you have lower tops, lower bottoms, you're in the downtrend. Because if someone asks you what the trend is, you must ask them, what time frame are you looking at? Because you can ask yourself the question, what's the trend in gold over the past 2 hours? And it's certainly down. The last 2 months, it's certainly up. The last 2 years, it's certainly down. So you have to put that time parameter in there to determine what the trend is over the time frame that you're trading. It's quite that simple. Now, another reason why I'm a little skeptical about the gold contract, and that is if this neural net that we got from Larry Edelson had been doing pretty well, and as you notice, in early March, actually it's around right around the 8th, it looks like, is that we should be getting ready to turn down, and that's right at the time of the new moon and solar eclipse. So gold is still certainly in an uptrend, but the volatility we're having today is a good sign, because you're getting really big swings. We go from 12.76 down to 12.50. You drop $26 an ounce and then rally $17 back really quick. You've got a market that really likes to rock and roll, and that's really what we like to see when we're watching some of these things. We're going to have Kyle on at the break, it looks like, so we should be able to be, we'll see how that works out when we get the timing set for him to come in to talk to us. The question has been asked to me over the net about the lagging of the FANG stocks, the Facebook, Amazon, Netflix, and Google. Why are they lagging the market so badly? And folks, I mean, some of these things lead the market up, and then they lose their leadership. Certainly Apple has lost its leadership. I mean, it's used to be the stock of the day. It had free advertising forever. They were pumping that stock like you couldn't believe. And believe it or not, everybody that bought that stock is below last year's low. I mean, boy, that's not a good sign. I mean, the January lows. So everybody that's bought that over the past few months has certainly not done very well. Longer term, maybe that will be okay, but we'll have to wait and see what happens with that. Now, I've also talked about copper because we have an ABCD structure going on in copper right now, and it has gone above the CD leg by, it's actually made the 1.618 expansion of the X to A move. That takes us up to the 225 level. So all I'm doing now is I'm waiting to see some type of a reversal pattern in the copper, either a candle like the shooting star or possibly an engulfing candle. Then I would be interested in maybe looking at the short side of the take a break, and we come back. We're going to have a nice guest on, and Kyle Cooper.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have Kyle Cooper on the line from Houston, Texas, our energy expert. Kyle, are you on the line?
How are you doing, sir?
How are you?
Good.
Hey, listen, I have a question regarding the industry itself about the gentleman that had the accident the other day. I was just curious, did you happen to know anything about that, or did you know the man, McClendon, at all?
I met McClendon once. He was actually a good friend of a friend of mine, but I certainly would not call him a close associate, and I doubt. I know he wouldn't recognize me if we passed him in the hallway. So, no, from that perspective, no. Obviously, his persona and his influence on the industry, I knew quite a bit about, as he was clearly one of the drivers of the shale revolution and the shale boom.
Mm-hmm. He was a pioneer, more or less, wasn't he?
I'd actually say that the real pioneer was a gentleman by the name of George Mitchell, right north of Houston, because Mitchell was really the first one who went up into the Balkan in the late 90s and really started pounding away, trying to prove to the industry that it could work. And I would say that he wasn't the true pioneer, but he was definitely one of the focal points after Mitchell had kind of proven it could be done in the Barnett.
Wow. Okay, now I've posted the first graph that you've sent us, which is U.S. total working gas storage. Did you want to discuss this? Basically, what we're looking at here is a potential bottom from our charts. We're basically chartists, pattern recognition people, and we're seeing a big pattern on the long-term weeklies in the natural gas. So just tell us what you're looking at here and what your feeling is on this market.
Sure. As that graph clearly displays, we are at near record storage levels for this time of year. Certainly not record storage levels at an absolute basis, as those occur always in late October or early November. We did just make that new record of just over 4,000 TCF. In 2012, we only dropped to a little over 2,400 at the end of the typical withdrawal season. Which is late March or early April, and that really appears to be the path again this year. I do agree that whatever price low we make here in the next few weeks, I think is going to be a rather significant low, because even though this winter has decimated residential and commercial demand, a lot of the underlying factors are actually quite bullish. Supply from those shale facilities has started to plateau and even maybe decline a little bit. That's adding some support, but if you're a natural gas bull, you do not want global warming. You do not want these warm winters. That just takes out so much demand, and that's what's really been the driver here over the last few months.
Yeah, I see that they're going to be 97 degrees in Galveston, Texas today. That's just hard to believe in early March. That is really hot. Listen, the question.
It's not going to be 97 in Galveston, but.
It's somewhere in Texas. I heard the weatherman say. I thought he said Galveston. Maybe I was wrong, but might have been Corpus Christi.
Yeah, I don't think we're getting to 97. We're going to get into the 70s and 80s. But
well, I must have misheard it, and I do that a lot, so that's not a problem. Are there any seasonals in natural gas that could be working in our favor for a potential bottom?
Absolutely. That typically occurs. Really kind of the great thing about trading natural gas is because of the storage capacity in the U.S. is revealed in the absolute storage levels on that chart I sent, you really have times when it's the most bearish it can get and it's the most bullish it can get. And that's really kind of at the beginning of the winter season in November, and then again in April, late March, early April, as we're coming out of the winter, and it's kind of come through our demand season. So those are really the two times that the market, that's when it resets. It always has to reset because of the physical constraints on the molecules of where they can go and where they're coming from.
Wow. That's really interesting. Now, the next chart that you sent us, I'm going to put that one here into the room so that we can take a look at that one also. And that is basically the projected storage. This is basically what you were trying to describe to us just now. Is that correct?
Yes, exactly. Those are the kind of the yellow dotted line is what I actually project is how we're going to progress this season. The rest of them actually are, if you were to take the prior year's true injections of what they reported each week in that particular year and added them to the current levels, those are that's the type of range you would see from just the last few years of to injections that we've actually witnessed and that have actually been put into the ground. And just as a further note on that, the EIA does a really good study, I think, where they go back and they look at the highest reported level that any storage facility that each storage facility has reported in the last 5 years. And that, to me, is a very, very solid methodology, and actually probably a little bit conservative as to what true capacity is in the U.S. And that's 4,335 BCF. So as you can see on a couple of those charts, we can't put in as much as we have in prior years because we'd exceed that capacity. But that puts a limitation on just how bearish it can get, because if storage facilities do truly fill, then production has to be curtailed, or we've got to find this new demand to keep the whole system in a balanced state.
Wow, that's really you got a lot of information, my friend. Now, do you do active hedging for some of these oil companies and things like that?
Most of my clients are actually trading clients, so this is what we kind of talk about in terms of what's the potential, what's the outlook, what has to happen to price if we're on one of those extreme paths. Obviously, if it's on the lower end of inventories at the beginning or towards the end of October and into November, that presents a rather bullish case for the winter, because then if you have a cold winter, you can really get some tightness. On the flip side, if we're on a current path to exceed storage capacity, then things have to change, because you can't stay on that path. Just go back to the beauty of natural gas is because it's a closed system in North America, you can really follow the molecules and really say, hey, look, this can or cannot happen. In financial markets, something can always go to zero, or it can always go to crazy numbers, and there can really be a little fundamental basis behind some of that. In the natural gas physical market, at least, there are definite restrictions as to what can and cannot happen. That really puts some bounds on how things can act and where they can go.
Wow. Now, in other words, most all of your accounts are speculative accounts. They're speculating on what just like we do, we're speculating on what the price of these things are going to be.
Yep.
Okay, that's very good. Now, if the folks wanted to reach you, Kyle, what's the best way for them to reach you?
Actually, probably via email at kyle.cooper@iafadvisors.com.
Kyle.cooper@iafadvisors.com.
Or go to the website, which is www.criterion, CRITERIONRXCH.com.
Okay, now I'd like to ask you your questions about spot crude. We're basically looking at the April contract now, trading around the 30-40. We have to take a break here, Kyle. Could you stay with us till after the break? Okay, so thank you very much.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender. It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Kyle, we have Kyle Cooper on the line, our energy expert. We have a question from one of our listeners up in Boston. Jay's asking, how much longer before a bottom in natural gas? And if you can tell us that, we'll be very appreciative.
Well, obviously, if I knew that exactly, this would be from my boat in the Bahamas. But as I said, Mother Nature has really turned incredibly bearish. It now looks like next week's EIA report might be the last withdrawal of the season. And normally withdrawals occur through March and into April. So that's kind of the bottom, I think. Or I would normally say that the bottom comes, sometime in March. But with those injections, you might still have some weakness until we start to at least reduce that yearly deficit. And with injections possibly occurring in another couple of weeks, I think it's going to be real hard-pressed for the market to rally. But then as we get into April and May, and I think we're going to start reducing the deficit at a decent pace, then you could possibly see some upside. But the next
we've got Jay on the line. Jay, did you want to ask Kyle another question?
Oh, yeah, I do. Basically, that was it, to try and get a sense of the long national nightmare of natural gas's collapse, when it might, conservatively thinking, when it might really start to show the strength that we feel like it should have developed.
Underlying demand is really, really solid. It's probably the strongest I've ever seen. It's probably running about 10 BCF above my historical models in a market that's about 75 BCF on average. So that's a really, really strong number. The problem is that you said you were in Boston?
Yes.
It's, 65 degrees up there today?
It hasn't been the kind of a winter that we had last time around. I mean, New Year's Eve, Christmas Eve was 68 degrees here, and the 4th of July was 70 degrees. So, we didn't use much natural gas for a big chunk of the cold.
That's right. But when you look at the underlying, it's really very solid, but it's just Mother Nature's taking out 15 BCF a day of demand. And that's really the problem. There's only been 8 days on my models that have forecasted 100 BCF of demand or greater. And that's just an abysmally low number. Normally you get 30, 40, 50 days of 100 degree type projections in a cooler winter. And so that's just really more than the price has been able to handle for right now. And with the recent weather shifts or that happened earlier this week, it looks like the balmy temperatures are going to remain in place for the balance of March, and that's going to allow injections to occur even earlier on top of an already historically high level. So that's what I think the lid and kind of keeps the pressure on price here for the next few weeks. But then as we move into April and May, I really do think that underlying strength is going to start to manifest itself and things start to look a lot brighter.
I see. Do you think the export situation, this initial exporting of natural gas that the U.S. is now doing, can that realistically have a strong influence on price?
It won't have a strong influence initially just because we're so well oversupplied. And initially, there's only one train running, so it's not huge, but it's helpful. And certainly as they complete the other trains and they get those on a full steady state type situation, right now it's just kind of intermittent. That certainly helps to tighten it up. So I'm really bullish in 17 if we can have any kind of normal weather. It's just right now the inventory overhang is really just a very daunting figure and daunting stat that the market kind of has to work through and overcome.
I see. So maybe by June we'll start to see some better numbers.
I think so. Actually, I think it'll be a little sooner than that. Actually, it has to be sooner than that. The market has to begin to work off the surplus before June because, as I mentioned, there actually is a physical storage capacity limitation in the U.S., and if the market's on a path or the market thinks it's on a path to exceed that, it's really going to punish the price. So I would say we need to start seeing evidence that we're not putting in the pace that we did in last year or the last couple of years, and that we're more on like a 2012 type pace where the market's really going to get hard. And you know what does increase the likelihood that we still have another significant down leg is the fact that, as I mentioned, next week might be the last withdrawal of this season. And if you start putting in, even if you put in 5 or 10 as opposed to drawing 50, that's going to still present some serious pressure because then the market starts calculating, oh my gosh, instead of drawing, we're actually adding, which means we have to put in even less in the traditional injection season, April through October. So I really think that there's still a high possibility of some significant downside here in the next couple weeks. And then, as you said, as we get to April and May, I think you start seeing some better weekly storage numbers. And if you're not familiar with the U.S. EIA, Energy Information Administration, puts out a weekly report every Thursday at 10:30 Eastern about the storage level in the U.S. And that's a very, very, very influential piece of information that the natural gas market really keys on.
Yes, I'm familiar. Wow. Well, thank you, Kyle. You really know your craft very well. Thank you, Larry, for having Kyle on.
Yeah, thank you for calling in, Jay. We appreciate it.
Sure.
Okay, Kyle, we want to thank you for being on the air today, and we'll have you on again soon. And as soon as you get the exact time of the bottom, please let us know. I was asking you about the crude oil. Do you think we're going to go down and make new lows in crude from here?
Actually, I still think there's a 50-50 chance because even though the technicals have really turned much more bullish, as you alluded to in terms of the gold market, you know, the last couple weeks is in an uptrend, but the last 2 years is still in a very, very decided downtrend. And just as the natural gas inventories are at high levels, we actually hit an all-time record high for U.S. inventory levels this past Wednesday, and we're 257 million barrels above the 5-year average. That 5-year average is the highest it's ever been. So there's still a lot of crude. Iran still wants to come on. So fundamentally, I'm still bearish. But look, I respect the fact that the market's been able to shrug off bearish information the last couple of weeks and is really holding that double bottom at $26 right now. So
yeah, it's rallied 40% in 5 weeks.
Absolutely.
That's a pretty good thing in the midst of all the bearish news.
Absolutely. And, you know, as the old saying goes, if the market doesn't go down on bearish news, then it's not that bearish. So I'm respectful of that price action, but the fundamentalist in me still says that the U.S. and the global oil supply-demand balance is still pretty sloppy, and Iran wants to make it even more sloppy.
Well, listen, thank you for being on, my friend, and we'll have you on again maybe in April as we get closer to one of these dates. Maybe we'll have a better chart pattern to take a look at it.
Absolutely. And over the next couple of weeks, really watch that weekly storage report, see if we do indeed begin to put natural gas into storage in March rather than take it out, which is the historical norm.
Okay, thank you so much for coming on. We really appreciate it, Kyle.
Take care. Enjoy the conversation. Take care.
All right, you bet. That was Kyle Cooper from Centurion Energy out of Houston, Texas, and he certainly knows his stuff. But we'll have him on again as we get closer to what we think might be this bottom in natural gas. We'll be watching it on a technical basis, and then we'll go from there. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and let's have a little bit of a old history lesson for the old cowboy. If you'll remember, 7 years ago, back in 2009, we were making the biggest bottom that we'd had since 1932 in the Dow. As I recall that, we had all of the planets were in one quadrant of the zodiac. It was just an incredibly tight conjunction and oppositions of so many things. And not only that, but we were at a 61% retracement of the low from 1987. And it was just an amazing array of patterns, 3 drive patterns. Everything was coming together. And I remember saying, this was before I was on the air. I didn't start TFNN until 2007, but I remember being on the air and saying that this was going to be a case where, what am I talking about? I was on the air 2007, 2009. When I wrote the letter, I said that this was going to be the biggest short covering rally since the 1930s, and it certainly it was that as we went up and made new highs. But keep in mind that the pattern that we're looking at from the long-term perspective is the 1, 2, 3, 4, 5 expanding triangle that we saw in the 1974 through 1980 period, where the Dow dropped more than 50%, and then also what we've had now from 2000 to 2015, which is even almost the same period. One was 13, this was 15 years, and we also have that same pattern on a long-term basis. We have the big cycle coming in here on Monday. We're going to be rocking and rolling on Monday for sure. And Monday and Tuesday are going to be pretty wild. And then we have another day on the 10th, which is not very far away. So we'll keep an eye on that. We're going to have Basil on and then Steve Rhodes. And Steve gave us some really good information on the ETFs that I was looking at. I don't know diddly squat about the ETFs, and they have reverse splits and everything else. So handle those with care. As Warren Buffett said, they're the weapons of mass destruction. And I certainly believe that. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.